Hello and welcome to our webinar this morning for Greenwing Resources. We have the Managing Director, Peter Wright, with us today. So a quick introduction to Greenwing Resources. It's an exploration and development company based in Australia. They're focused on building value from a portfolio of strategic resource assets, which include the San Jorge Lithium Brine Project in Argentina, the Grafmada Graphite Project in Madagascar, and the Kew River Project in Tasmania. These are all wholly owned assets. They give Greenwing exposure to lithium, graphite, and polymetallic minerals. They have $3 million in cash, no debt, and an experienced management team, and should be well positioned to deliver significant value in 2026. They're also poised to benefit from growing global demand from critical minerals and industrial resources. Each asset represents a unique opportunity for value creation. So, Peter, you have the floor.
Thanks, Anthony, and thank you both to you and Wave for giving me the opportunity to speak today. And the people from our company said you've been great to deal with, and so really appreciate that. I quite like the colour scheme too. It's roughly aligned with the colours the Canberra Raiders are going with this year. It's working out that well for them. And look, thank you for everyone for their time today on a Friday morning. Look, at the highest level with Greenwing, as Anthony pointed out, we have a really interesting series of assets, but importantly, we've got the right team. And I've always thought without the team, you're essentially talking about buried rocks, and that's how they'll stay. So we've got the right team. We've got a clear and well-articulated plan amongst that team to deliver what we think some real value for investors this year and our stakeholders. And as Anthony touched on, after some pretty challenging, if not humbling years with lithium and graphite in particular, we got the tailwind of what we've always seen as a long-term, really robust fundamentals for lithium and graphite. Throughout my investing career, firstly as an analyst, sort of in the early 2000s, I've always looked for enduring dislocations between supply and demand. And we saw a few of that. We saw that with bulk commodities in Australia in the early 2000s, and iron ore and coking coal in particular. And James Brown and myself have been working together since circa 2010, and always thought that this existed in lithium and graphite. We've been through a couple of cycles, and I'm very firmly of the view that we're coming back into one now. So I just thought I'd give that broader context, Anthony, before stepping through the presentation formally, and look forward to taking questions at the end. So you can see here, that's just our cover page. And again, thanks to the guys at Sharewise and Homodeus Research for having us and giving us the opportunity today. Just next with the disclaimer. So look, anyone that is contemplating investing in the company, and my details are at the end of the presentation, both phone and email. So feel free to go through that in forensic detail and give me a call, or your financial advisor, probably more importantly, with any questions. So look, as Anthony touched on, the broad picture for us is we have a fantastic team. We are capitalised. We have zero debt. We have 3 exciting projects. We've got a really well-articulated plan to deliver value for all 3 over the next 12 months. We're looking at a company with circa $3 million in cash, no debt, very experienced management. We've all been together for a long time. We work well together. We've had success previously, and we're hoping that we have it again. So just touch on the assets there. So the San Jorge Lithium Brine Project, there's 23 salars only in the lithium triangle. And the lithium triangle is to lithium what the Pilbara is to iron ore, what the Bowen Basin is to coking coal. It's the best basin for lithium on the planet. Why San Jorge is such an interesting asset is the ownership of salars are typically really fragmented. So if you think of a glass of water on a table, you're talking about a glass of water that has 5 or 6 straws in it. There are always 5 or 6 different owners of parts of the salar. We own the entire salar, so we're one of 4 companies only in the lithium triangle that can make that claim. So there's only 1 straw in the glass, but more importantly, We've got 38,000 hectares surrounding it. So basically got the table that the glass is sitting on as well. And whilst the salar is important and the visible salar is impressive to look at, the reality is that with salar deposits that most of the resource often sits off the visible salar. It's you know, you imagine a body of water that's tilting and it goes down undercover. And in the case of ours, it's extending materially to the west and to the north. We have a culture of employing the best possible staff and service providers we can find at Greenwing. So we've got Murray Brooker, who has done a lot of work with Orocobre and Galaxy and Lithium Power International in the Triangle previously. He's running our programs for us. We've partnered with Zelanders, who I think are arguably or inarguably the best brownfield services company on the planet. They've been fantastic with us. They've just completed the subsurface modelling of our brine, and it's extending down over 1,000 metres. So that sets a frame of reference for our initial drill program, when we drilled 6 holes, delivered a resource in 2023, but I'll get to it later, but we only drilled on the peripheries of the salar. We only went down to 350 and 400 metres. We went from 30 parts per million lithium at surface down to about 270 at depth. So, you know, it's a linear relationship. The further away you move from the atmosphere, less oxygen, less oxidisation of the resource, your grade goes up and there's generally more of it. So we think that subsurface modelling has been really important, and it's a great work program that Zelanders have delivered. Just staying on the critical minerals theme, we built a graphite mine in Madagascar, which was quite an adventure. We operated that to 2020. We produced everything from super jumbo concentrates through to fine flake graphite. We qualified into the EU and the US. We sold concentrates there. We sold into all major markets. That asset remains under mining lease to 2042. It sits 3 kilometres off the national highway and 110 kilometres from the country's only deepwater port. We produced 45% roughly large flake and above and 55% fine flake graphite. So it's a really interesting project. There's a lot of value there. There are some strategic considerations with graphite that I'll touch on, but effectively 90% of natural graphite comes from one supplier, which is China. And China has threatened and intimated several times they would like to, or are looking at withdrawing that supply. And that would cause enormous disruption to Western economies that are pretty reliant on lithium and graphite, and it's becoming more and more pervasive in those economies. The third project is Kew River, which was a legacy asset and predates my time, but we've been stepping through this pretty carefully over the last 3 years, starting with almost a blank canvas, but we've delivered a resource, we've delivered a scoping study, we have quantified the environmental liability, we had our decommissioning rehabilitation plan accepted in February, it's at $1.7 million. We've subsequently got the mining lease there. So we're stepping through a process, and as we've done that in parallel in Tasmania, there's been a really interesting industry pop up almost out of nowhere, and I would imagine everyone's seen the headlines with Firmus, but that site is ideal for data infrastructure, and we have over 200 megalitres of water. There's a 63 megawatt substation at Kew River that's hydro powered. It's only dispatching 22 megawatts at the moment. It's a cold, remote, secure site, so it is perfect for data infrastructure. And you know, this isn't shameless pandering to the Matic. We've been engaged with the government down there for 18 months about this. We've got our mining lease post that engagement. We've been wholly straightforward and frank with what we intend to do with the site. So, you know, the three interesting assets with Kew River and San Jorge in particular, we're doing a lot of work there. We're doing a pre-feasibility study at Kew River at the moment. The scoping study, yes, scoping studies are preliminary, but it forecasts cash flows in excess of $100 million. Kew River sits next to an operating mine at Helier, and it sits 15 kilometres from another one at Rosebery. Both plants have processed Kew River ore before. So what we are contemplating is just mining the open pit there. There's gold, silver, zinc, lead, and some copper in it, and deliver some really substantial cash flow, which would then set us up really well to partner with someone. We're not data infrastructure people, but we see real scope at Kew River to deliver some real value for shareholders. So, just touching on what I said at the start, we have a really well-articulated plan to deliver value. These three assets all fit within a $40 million market cap with the team that we have, $3 million in cash, no debt. And I think the gentle and increasing tailwind of lithium and graphite improving. Just next slide there, please, Wei. Yeah, so look, just some broader sort of context around lithium and then graphite. So as I touched on, James Brown and I started working together in 2011 with a company called Altura, and we had the Pilbara lithium field, which is now the sort of beating operational heart of Pilbara Minerals. And we had 27 million tonnes at 1.3% lithium oxide. We had a sort of $5 million market cap, and the lithium market was about 500,000 tonnes a year. It's now 2.7 million tonnes a year. And just to give some context to that, so for all of the capital raisings, articles, bull market, podcasts, hashtags, whatever you name it, the market's only added 2.2 million tonnes in 16 years. To stay in balance to 2030, low-end estimates are about 7.5 million tonnes. So to stay in balance, the lithium market needs to add somewhere around 5 million tonnes in the next 4 years when it's added 2 in the last 16. I find that improbable. I find that improbable with the ESG overlay, rightly or wrongly, that you have with getting projects developed. Everything from drilling permits to environmental license to social license. A lot of this stuff is necessary, but it's very time consuming. And you're also coming off 3 years from 2022 to 25 where concentrate prices went from $90,000 a tonne to $5,500 a tonne. And not too many projects reach final investment decision with that sort of pricing trajectory. So I think we're coming into a really interesting time for lithium. I think it's an ideal time for us to have a lithium project in the lithium triangle of that potential scale, to have an entire salar to ourselves in the basin. Against that context, we are stepping through a scoping study. It's already delivered some really exciting results. We're about to dispatch metallurgical samples for testing. We'll update the market on that soon. But and we've said to the market that we're in the process of stepping through to try and attract a strategic partner for San Jorge, which looking forward to updating the market on that in due course. But what we're finding, and having been in lithium for some time, the first iteration of lithium boom was sort of battery makers, understanding that without lithium they had redundant businesses. The second iteration, and these are broad generalizations, the second iteration was automakers, and we had Neo put $12 million into our company at 55 cents. And the third iteration, I think, is going to be actual sovereign states and semi-government organisations who are beginning to understand the disruption to their economies without lithium and graphite, sort of 2030 and beyond. And it's not so much the conventional metrics of valuing these assets, discounted cash flows or enterprise value, but it's the supply chains that they underpin and the economies that they underpin is how these assets get valued in deficit. So I think we're really well placed. We're looking to deliver the scoping study later in the year. I don't want to give too much colour on the strategic investor process, but we would like to conclude that over the next quarter. So there's a lot of news coming. The last 2 cycles I've found that graphite's lagged lithium by about 12 months, but we have a really good platform there to realise value from. We mined there. We've in the 4 years that we've been, 5 years since we shut down in COVID, we've taken the resource to 62 million tonnes. It's a resource that's qualified into the EU and the US, and not quite as compelling fundamentals as lithium, but it does have really compelling fundamentals. And we've completed a lot of work there. We sold everything from super jumbo flake concentrates through to fine flake concentrates. So we think we're well placed to participate in what I think is coming in critical minerals. Next slide, please. Thanks, Wei. And this is just really reinforcing what I've just said. So we're doing a scoping study at San Jorge, which we're looking to table later in the year. We're doing a pre-feasibility study at Kew River, just looking at reinforcing those economics around stage 1. So around the open pit mining, we're currently talking to potential processors of the ore. But, again, you're referencing our market cap and the potential cash flow there, along with San Jorge. It's really exciting. There's 1 million tonnes there at San Jorge already, just from the 6 holes that we've drilled. 62 million tonnes of graphite at Grafmada. We've declared an initial resource of about 2.3 million tonnes at Kew River. We've highlighted there as well, we think, some really material exploration upside. So it's all systems go for us across the 3 assets. We're funded to do it, and we're looking forward to stepping through that over the next sort of 12 months. And next slide. Sorry, Wayne. Again, I'll just touch on the board quickly. We've got a fantastic team, and our corporate logo and all our corporate gear is Nuestra fuerza es nuestra gente, which is our greatest strength is each other, which I believe, and not just the people on the slide here. We've got a gentleman called Marcelo Sanchez, runs our business in Argentina. He was the country manager for Orocobre for the best part of 10 years. We have fantastic staff in Madagascar. I've touched on James there. So James Brown arguably has an unparalleled experience in lithium. As I said, we've been working together since 2011. This time last year, he was still the managing director of Sayona, or now Elevra. It's a $2 billion company. He's still an executive director of Elevra. I speak to James most days. He's fantastic to have us, there with his guiding hand on the company. I'll just touch on Chris Godfrey, and it sounds like an obvious thing to say, but mining companies need mining people running them. And in James and Chris, we have 2 real mining people. Chris has been in mining for the best part of 40 years, and he just brings that hard operational edge that we need, in dealing with contractors and dealing with scope of studies and dealing with staff in other countries. And I don't know if anyone's seen Landman. Like, Chris is almost an Australian version of Landman, and we're very lucky to have him, and he's done a fantastic job for us in Tasmania. Angus Craig's our CFO. Angus and I have worked together for about 15 years as well. Lucky to have him, and Jeff Marvin, who's our United States based director. So it's a fantastic team. We work really well together, and have worked really hard on coming up with this plan, which we're looking to deliver over the next 12 months. So you can see here, this is the project itself. It's, to digress, it's a beautiful site. It's sort of 4,000 metres up in the Andes. It gives meaning to that phrase, the silence is deafening. It's dead quiet up there, but it's sort of really loud, like the wind, and there's a few 7,000 tall metre mountains on our lease. It's beautiful. So look, we've made a pretty good start there, interrupted by what people have termed lithium winter, 2022 to 2025. Early last year it was difficult to get meetings with brokers, let alone get them to invest in the company. But I think we're through that now. We're in the process of delivering a scoping study that is inclusive of several bodies of work, with metallurgical test work, looking at initial economics, looking at prognosing some drill targets for we intend to return to San Jorge and drill. And if you just go to the previous slide there, sorry, Wade, thank you. And as I said, look, there's a supportive backdrop of the market, but also Argentina itself. That country is transforming at present. Whatever you sort of think of centre right-wing sort of governments, Milier is an economist, is an economist by trade. He's an economic rationalist, and just the microeconomic reform that you see as you go into Argentina. We used to go to Catamarca, well, we still do. It's a city the size of Townsville, and it used to have 1 flight in and out a day. Which is crazy. And now there's a few airlines servicing that. There's multiple flights a day. But they signed on February the 4th a reciprocal trade act with the United States. The following day, they signed a critical minerals act with the United States. And that's all about some of those broader themes I'm talking about, of setting a robust financial framework that Americans and American companies can invest with certainty in Argentina and Argentine projects, which I think is very good news for us. Thank you. You can see here, this is the lithium triangle. As I said before, it's the world's main lithium province. whilst it's really impressive what goes on in Western Australia, I think people get confused that those guys aren't producing 200,000 tonnes of concentrate of lithium carbonate equivalent. They're producing anywhere between 4.5% to 6% lithium oxide concentrate. So you need 16 to 17 tonnes of that to make a tonne of LCE. It comes out as LCE out of the lithium triangle. It's a really important differential. And just touching on some of the things I've said before, it's 100% owned asset. It's a really big asset. We've sort of just scratched the surface of it. We're looking to get back there and drill the project. There's an initial 1 million tonnes there just from drilling on the peripheries of the project. The subsurface modelling that we've done indicates that there's a much larger resource there, which we're really keen to sort of get back into and find. And just that bottom left hand, you can see there, that's the salar itself. The salar itself is about 2,600 hectares. It takes about 90 minutes to drive around. It's quite large. And then I think on the next slide, if we could just step to that way, you can see here, we drilled in the peripheries of the project. It's to the west and to the north is deepening and maintaining its consistency. So that testing isn't to the lease boundaries. That's as far as we've tested, and it's still open and deepening to the west and north. So we're really excited about what we think is there and what we think that we can ultimately achieve at San Jorge. Coming back to Grafmada, this is in Madagascar. I've been to Madagascar the best part of 10 times now. We completed a lot of work there, 2016 to 2020. We produced there everything from super jumbo flake concentrate through to fine flake concentrates. We qualified and sold into all key markets. We didn't have a ton penalised or rejected. And whilst graphite, like lithium, has had a tough few years, we do think that its time is going to come again, which we're really excited about. We think that, with the disruption that withdrawing graphite from the market would cause to Western economies, that there'll be a strategic value lens come back to this asset in the graphite market itself. And when it does, we'll be extremely well placed to participate in that. Next slide. Thanks, Wade. You can see here there's 62 million tonnes. We started mining at Low Harano, then went to Mayaphadoc. Most of the resource we're picking up is in the south of the project. And whilst the stage one was 6,000 tonne project and a 6,000 tonne production, it was really, in essence, a very large pilot plant. What we wanted to do was establish that we could produce, that we could qualify the product, and then go back and make a much larger project of about 60,000 tonnes, which would be globally significant. You can see there it's on the national highway. It's only 120 kilometres away from port. Some of the stuff we're picking up in the south, which we've told the market about recently, well, a couple of years ago, but at Ambata Fofana in particular, there is some exceptionally large flake graphite there in the drill core, which we're looking to get back to and further prove up. And, large flake graphite, it's not as dynamic a market as fine flake. It's the fine flake graphite that goes into your phones and vehicles, but the larger the flake, the more valuable the flake and the higher value and the higher margin. So it was so key that we produce circa 45% large flake and above. It gave us a real price point when we were operating. So just the next slide, please. And now Green River, as we call it. So looking at two-stage strategy there, stage one mining at present, there's about 650,000 tonnes of ore there in the open pit. We're contemplating mining that and transporting the ore either next door to an operating mine or 15 kilometres up to another operating mine, both of which have processed the ore before. We think, and yes, they're preliminary economics and a scoping study, but it looked like that would deliver in excess of $100 million via third-party infrastructure. So it is really interesting. It's the culmination of 3 years of really hard work at Kew River. But there's a platform there now to unlock some real value. It's almost the end of the beginning was getting the mining lease, and now we step into the more value accretive stages. So we're stepping through a pre-feasibility study, which we're looking to table later in the year. We're really happy with how that's going. We'll update the market over the next sort of month as to how that's proceeding and what the pit shell looks like and if any of the economics have changed. So it's really exciting. But more by luck than by design, it's occurred to us over the last couple of years that everything is there to participate, and just touching and going back to one of my initial comments about wanting to be exposed to enduring dislocations between supply and demand. There is an enormous demand for data infrastructure coming. There are limited sites in Australia to house that. We sit there with a site with a 63 megawatt substation adjacent, over 200 megalitres of water. It's a cool climate. It's elevated. It's cleared level site. It's remote. It's secure. It is exceptionally compelling site for data infrastructure. And we think that's the logical extension of the project and how we've derived the most value for not only our shareholders, but also stakeholders. So the objectives there for 2026, actually need to update this. We have concluded the mining lease. We've been awarded the mining lease, which we're very happy about. We've found Tasmania a fantastic place to deal with. We've found, all departments really proactive and easy to deal with. And it's where Chris has added so much value. Chris maintains a really active dialogue with the departments. We've been down there. We've spoke to all departments about what we're trying to do there. They're really helpful and really interested. So, we're really excited. It's not, I suppose, our core historic competency, which is lithium and graphite, but we do have demonstrated track records of delivering value from projects, and a lot of thought has gone into this and a lot of work's gone into this, and we think there's a really achievable pathway to achieve something really exceptional here at Kew River, in parallel with San Jorge and Grafmada. Thanks, Wei. You can see here, that's where Kew River sits. There are multiple operating mines around us. You go into Burnie, which is a nice town. I'm from Dubbo in Western New South Wales. So I like small country towns, and certainly Burnie is one of those. I'd like to get in the water there at all times of the year. It's quite cold, but it's nice and bracing. It's some of the achievements there. We've updated the JORC resource to 2012 standard. We think there's a lot more there, which we've highlighted in a series of announcements last May and June. With the metal prices, this was a producing mine up to 2010. The only thing that's changed between now and 2010 effectively is gold, silver, copper prices have all improved, making this open pit, rudely economic, we think. So it was almost a mine that's been interrupted for the best part of 15 years, and we're looking at bringing it back into production at a time of really strong gold, silver, copper prices. And, really for us, it's an earth-moving exercise. You're moving to one of two processing plants, potentially a third. So it's really interesting. It's really, we've commenced discussions with potential partners to help us move the dirt there. So we'll step through that process over the next 12 months and keep everyone up to date with how we're doing, and just further reinforce, that we're stepping through a sequence to deliver some real value there at the site. That's just the initial resource there that we tabled last year. So coming back and tying all this together and just reinforcing those initial themes, we're in a really strong position, as strong position as we've been for a couple of years, post pretty tough, if not humbling, few years in lithium and graphite. We're funded, we've got a fantastic team, and I think just as importantly, the team, we've got 3 separate resources. 2 of them now sit under mining lease at Grafmada and Kew River. We have production experience. We've got extensive experience in critical minerals. I think the critical minerals market is turning, and generally turns really quickly when it does turn. So I think with that backdrop, we're really well placed to deliver value in both in the critical minerals business. Just spoke about Kew River and the unique pathway, but achievable pathway that we're articulating at Kew River. So, that's really the presentation. I'm really happy to take questions if anyone has them. And as I always say, I put my details and phone number at the bottom of every ASX announcement. So, welcome questions. I don't particularly mind if you've got 1,000 shares or 10 million. You're all, I like hearing from all our shareholders.
Great. Thank you, Peter. Thanks. Great presentation. We do have some questions. Let's see what we have first. Can you give a little, I guess, description on how you see markets unfolding for lithium and graphite? I know you touched on it, but is there any sort of harder data you have that would give some comfort to the outlook for the markets?
Look, not at hand, but I note that Canaccord and Bells have both updated their prices, and there is a growing consensus that we are heading back into deficit. And as I said before, that drives a particular type of behavior in my experience in the lithium market, that it's not so much about, oh, well, look, this has an MPV of $500 million or $100 million or whatever it might be. It's more so the $1 trillion supply chain that these assets underpin and the strategic risk to those supply chains without the raw materials that they need. So, I just get back, and yes, it's a broad brushstroke and a generalisation, but it's also a fact. The market's added, a little bit over 2 million tonnes in 16 years. And I find it really hard to see it adding another 5 in 4 years. And, the initial and very high level non-binding discussions that we've had around data centres and potential designs that's a quantum of demand that's not even figured into into the equation at the moment. All of them need battery backup, enormous batteries, so enormous additional requirement for lithium and graphite. And I struggle to see where it's coming from.
Yeah. Could you talk a bit more about the fundamentals for graphite? It is essential in many different areas, not just for batteries. It's seen as a consumable in some sectors. So yeah, could you give a little more background on graphite fundamentals?
Well, look, fine flake graphite is batteries. It's the anode material. You have your lithium ion solution, you put heat into it, you've got a graphite anode and basically a cobalt cathode, and you heat it up and separate the charge, and around it goes. The lithium ion solution cools down, you put the charge back in. But the larger the flake, the more applications. So you need super jumbo flake graphite to make the best graphene. And some of the applications, if they could commercialise a commercial scale graphene around aeronautics and the amount of fuel that you would need, and expandable graphite in new buildings, and you'd need large flake concentrates for that. And so where we were lucky, and where the market I think sort of misses it at times, is with Syrah and others, they're hard rock producers, which is relatively a new phenomena, and in the history of graphite mining, relatively unorthodox. It's typically come from Madagascar and Brazil, and it sits in what's called a saprolite host unit, which is a weathered sort of oxidized resource. So people would look at our resource and say, look, it's 4.5% or 4.2%. And some of the hard rock producers are, 12 to 15, but they're drill and blast, multi-stage crushing and grinding, and really only get to one product at the end point, which is fine flake graphite. With ours, it's free digging, not a lot of processing, and you're getting multiple products. We were circa 45% large flake and above and 55%, and you look, it's been tough in graphite. China is a formidable producer with regard to cost base, and with that's come an incredible concentration of supply. They've made a lot of noise and a lot of direct and obtuse sort of threats and commentary around, we are going to restrict supply, if not remove it. And if they did that, most OECD countries are very short graphite, and from that, you've got the EU and the US have both categorised graphite as a strategic and critical mineral. So I think that leaves us really well placed.
Do you think already having the infrastructure there, and I guess the proven supply routes gives, I guess, proven customers, sorry, do you think that gives you a big leg up on some of the smaller guys who still don't have projects? I guess.
Well, look, it's an enormous benefit that people can look at that resource and say, okay, it has qualified into the EU and the US, and it's been accepted there. And it wasn't an enormous volume, but we did have an unblemished sales record. We didn't have a ton penalised, let alone rejected. And it's on the national highway. It's a highway name only, but it's 120 kilometres, about 3 hours down to port. And we operated there for a couple of years. We had a really good operational team, and But yeah, so I would think if that strategic lens returns to the graphite market, and we're starting to see that with an initial level of inquiry around graphite, that our asset would stack up very, very well. But in what I have found over 16 years in lithium and graphite is just this binary sort of view of the market. It's either total boom or total bust. And we've had the latter over the last 3 or 4 years, however compelling we think the long-term value is.
Good question on just how long do you think it would take to bring Grafmada fully back online?
It would take a couple of years. We wouldn't want to go back and do 6,000 tonnes. The objective was to do the 6,000 tonnes, establish the product, understand how to process it, how to bag it. And, the guys did a fantastic job. It's borderline a work of art to put some of that stuff in a bag and dry it and get it to specification. But to take all of that experience and make a much larger project and capitalise on the platform that's been set there. You would look, I'd only like to answer questions honestly. If we got the funding to build that today, it'd be a minimum of 3 years to build a 60,000 tonne per annum plant.
Yeah, okay. We have a question from the audience as well, who had bought in post, I guess, the NEO investment. And his question is about what Greenwing is doing to make sure that the extracted minerals, especially the graphite rock and the lithium salar, have a sustainable demand profile. I guess I'll call it visibility there when it comes to customers and revenue.
I'm not quite sure I totally understand the question. Look, I would answer that by saying that the visibility would likely come from and as I said, we're running a strategic investment program at the moment for San Jorge, and without inferring how that's going, but the first iteration of that, when we had NEO, and the current iteration is any strategic investor is investing because they want the offtake. So we would naturally disclose who any counterparty was and the offtake rights that they had. Graphite is a little bit different. You basically sell to trading houses and they on-sell that. We had 2 fantastic relationships. We dealt with a group in America called Asbury Carbons, who were at the time one of the bigger consumers of graphite on the planet, and another group in Lübeck in Germany, which is where most of our volume went, which we disclosed that to the market, which of course we would do. Nothing to sort of hide there.
Yeah, okay. Another question from the audience. You have a strong balance sheet, but you also have 3 projects. So do you have, I guess, any strategic priorities when it comes to capital allocation between all of the projects?
Look, we're funded for the balance of this year. As I've said, we are conducting a strategic investment process for the lithium. We want to drill there again. We think there's a lot more lithium there. That is, and just you have to bear with me for 1 second. I'm going to have to plug my computer in. It's running out of battery. But we at a $40 million market cap, I don't think it's plausible that we would go and raise $15 million to get to pre-feasibility stage. The more likely valuation pathway there is to sell a stake in the asset to fund that and put at least an imposition on the existing shareholders as possible to get maximum progression of the asset. I'm so sorry about that. I'd run out of battery, ironically.
Needs more lithium.
It needs more lithium and graphite, yeah, and more heat in the solution. But sorry, if you could just...
We were just talking about the sustainable demand, what you're doing to ensure that you had, I'll call it visibility. But it sounds like, I think we pretty much answered most of...
Look, it's a constant balancing act, and it's a fair question with 3 projects. But what I'm really focused on is preserving shareholder equity and I'm one of the largest shareholders myself. I've been in every capital raising for the last 10 years. I've never sold a share, bought a lot of shares on market. Anyone that wants to go back through the change of director interest notices. So it becomes a balancing act of how do you fund that progression? And I think in San Jorge that the most logical step is to sell a part of the project to get that funding, to take it to a pre-feasibility stage, preserve as much of the project as you can, but develop it at the same time. If we were to go out and raise money at the moment, which we're not going to do and will not be doing, it would be an enormous capital raising. It would be extremely dilutive. So that is not the pathway that I want to take. And exactly the same equation at Grafmada. We would like a strategic partner. Having mined a couple of times, it's my view that really the pathway for companies like ours is to establish value, highlight the upside, and then, get a big partner and retain a stake, retain the upside, but farm out the operational expertise to those that do it for a living.
Yeah, sounds good. Future plans for Kew River. It looks like you have mining and the data center opportunities.
Yes.
Are these mutually exclusive if something happens quickly, or is there a period of years that you want to mine first?
At present, and with the scoping study, it looked like about 12 months of mining for the 660,000 tonnes, which
okay.
And they are definitely sequential. You couldn't have data at the same time as you're mining. So it's a sequence of stepping through the open pit mining, rehabbing the open pit while we do that, not sterilising the underground resource, so leaving that there. It's a 300 hectare site, so you're looking for 5 to 10 hectares. But as I said, it's a site with an enormous water endowment, a hydroelectricity endowment, remote secure, and it's an evolving jurisdiction in Tasmania. Firmus and Subco with the underground cable is almost the final piece of the puzzle for us. So it's really exciting, but it's absolutely sequential. And they have been the discussions with the departments in Tasmania that you would do the mining first, delivering the ore to one of a few processing options, rehab the open pit, and then have really a perfectly packaged site to build something we'd like to think substantial. With the water endowment there is as big as the biggest data centres. The available hydro there is quite large. There's a footprint there to build something really meaningful with the right partner.
Yeah, good. One last question, and it looks like it's just a single word answer, but we have a member of the audience that wants to know what language your motto was in.
Son mi hablar español, amigo.
Muy bueno.
Yes, sí. I like. I'm learning Spanish. It's not perfecto, but no, it's in Spanish, and maybe I didn't translate it properly. But I've found in my travels, you learn to say thank you, hello, please, sorry.
Yes.
It's generally a pretty good start.
Yes.
I'm a little bit beyond that in Spanish. I haven't practiced for a little while, or haven't been there for the best part of 12 months. But I have a weekly call with Marcelo, and then a couple of other times a week, so I try to practice, but it's a lot of fun.
Good. Well, on that note, I think we'll end there, Peter, but thank you very much for this informative presentation on Greenwing and its prospects. It looks like it's some exciting times.
Yeah, look, thank you so much to you and Wei and Lavender for your time. I really appreciate it, and I really appreciate everyone's time this morning. And look, I think we're well placed. As I said, my phone number and email are at the bottom of every ASX announcement. Please feel free to give me a call, and I'll do my best to come back to you as quickly as I can.
Great. Thank you very much, Peter.
Thank you.
And we'll end there. Thank you.